Good day. Ira Epstein with your SPDR ETF wrap-up, and this is for Thursday, the 20th of February, 2020, and we're getting on to 5 p.m. I wish I'd said a.m. 5 p.m. Central Time. You know, I get up 4:30 in the morning and do the morning subscriber video for the futures people at 4:30 a.m. By 5:30 I'm recording because you got to read and everything, but it's interesting. So time's there. I want to remind you before I go into any commentary at all that there's a free trial for you of my SPDR ETF afternoon subscriber video. It is very different than this one. The colors are different. There's more technical analysis involved, much more specifics, and I cover 27 charts in that one. So if you like what the markets are about, you might like what I'm doing there. So today the market decided to rethink the exposure of the markets to the coronavirus, COVID-19 as they call it. China also decided to give us another method that they're going to use for counting who has and who doesn't have. That's not good. We've already seen their first count method, then they altered it once. I think it was a week or 10 days ago. Now this is the second time they're doing it. Don't know if I like that or not. You would think it's getting better, but then something bothered me when you read today, I think it was a Reuters report that I read, where in the Hubei province, I think I'm saying that province right, they have told the workers that are non-medical related in factories, those not making masks, gloves, garments, and the like, not to return to work in that province. Now, I don't know the exact cities that they're saying, but the province is the province. Wuhan is there until March 11th. This is only the 20th of February. That's over 2 weeks away, basically. Wow. So I was a little surprised to hear that. Tells me that they're not ready to get that province. It can't be under control yet. They're going to change the counting method. So I don't know what that really means. I know at the same time, be it in Shanghai, Beijing, they are saying that they're putting together a system where you get rewarded to return to the factories there, yet they're finding some new cases as well, but not the spread that they had in Huabi. So who knows? I don't know, but the market decided to react a bit. When we look at the daily chart of the technical sector, the market came in and filled a gap in the chart. A gap is simply this. You can see the market here, that was Tuesday, gapped up Wednesday, filled the gap today. Okay, you still have gaps in the charts from back here. Remember that. Will they get filled? I don't know. Futures markets typically don't leave gaps, typically. The reason these markets can is they're only open from 8:30 until 3 in the afternoon, and they have to take in all that evening trading in a short period of time that you saw in the futures markets, which open at 5 and close at 4. So they open at 5 p.m., close the next day at 4 p.m. They're only closed 1 hour, Monday through Thursday. That's very important to remember. They open Sunday night, remember, at 5, and they go right until 4 the next day. So you can walk into markets and you get the NASDAQ up, big or down, and you can leave gaps on the chart, is my point. Futures generally don't do that because they have time to fill it. Little different techniques you have to use. But what happened here? Well, the break today certainly took out a previous low. So now I have a pattern for the first time in a while of a higher high and a lower low. If I take this off, you can see that since this break, you've kept the pattern of higher lows, higher highs going in the chart. It could be a stall that the market's running into. The 18-day average of closes is what I term the line in the sand. If you go back and you look at the charts, it's often an area that's very important to the markets. If a market breaks down, I wouldn't be surprised that that number tries to be a support zone. What about resistance? The upper Bollinger Band is the resistance. Markets, according to the algorithm of the Bollinger Band, markets will trade within the bands, the black top and bottom, 95% of the time. I find that stock indices and ETFs and SPDRs do a pretty good job of adhering to that. I'm seeing sideways action, and momentum is still bullish. You have to get the red line under 80 for me to lose my bullishness. Therefore, on the hierarchy of what you're seeing here, this rules the day. This other is not noise. It's important because the market has paused itself, but it's still being bought until that red line, in my opinion, crosses and closes under 80. When we come to XLI, this is different. Now, if you take a look, this market, I want to get to where it began. This day, it did not have both numbers over 80. It did here the very next day. So we'll come back just to prove it. Here's Wednesday, you don't have it. You have it on Thursday. You have it again on Friday. You had it again on Tuesday. That's called embedded. You need 3. If you lose it, it's often a sign, and you lost it yesterday, it's often a sign that price in the 18-day average, I say the 18 because it's the closest of the key moving averages. This is the 100, that's the 18, are going to make a run at each other. It's a warning sign momentum to the upside's been lost, and today it's exactly what occurred. The market had an outside day down. It didn't close under 83.48, so the trend didn't turn down yet, but you've got the swing line down, you've got the bias up, momentum pointing down, and any close under 83.48 puts even the bias down. Can anything negate this? Well, you'd have to re-embed, and that's going to take another 3 days minimum. In the energy sector, the market's been working to higher lows, higher highs. Now, yesterday, not today, was the first day the market closed over that 18-day average, putting into play that if you don't get under 53.63, the possibility wherever this Bollinger Band, when you reopen, comes in will be the resistance. It's trying to make a run for it, but you're in problem here. You're overbought already. Any reading over 70 in the slow stochastic, I call overbought. It can change in one of 2 ways. You get a correction, it can get back under that level with the blue line and you're fine, you're not overbought, or both numbers have to get up and go over 80. Therefore, I'm looking for a resistance point right up there. In the NASDAQ, you still have the embedded reading. Therefore, on the pullbacks, even though the market took out a prior low, I think the market's initially being well supported. Lose that reading, and I think price and the 18-day average can make a run at each other. Don't lose the reading, and this is just, if you will, consolidation of the current pattern. The slow stochastic rules the day. On the emerging market ETF, the EFA, momentum down, trend down, lower highs, lower lows. First objective, still very much in play, 68.08, which is the 100-day average. If that gives ground, maybe the 67.61. If you were to take out 69.11, you'd break this pattern, but nothing can turn the chart bullish tomorrow. Everything could go neutral, but right now it's bearish on all levels. In gold, you're 3 days over the upper Bollinger Band. Only 5% of the time do you stay over or under a Bollinger Band, but I'm always looking at the pattern that the market comes from. And when you get this sideways action, this is what breakouts to the upside or downside will come from. It generally doesn't come from a wide pattern like that. This is even a tighter pattern, and that set it up. So you're in a breakout to the upside. Fridays have not been friendly to gold for a very long time. Go back, look at the Fridays on your chart. You'll see that. The odds of getting back under the Bollinger Band are strong. They're probably in the neighborhood of 98%. Why? I count each consecutive close over a Bollinger Band, taking one of those percentage points of 5% of the time it'll close over the band. It's got to be consecutive. It's a rule of thumb. There's no magic to it. I've gone back and counted how many times in given years and looked at charts over and over, and I see that probability. But there's also another one. Number one, you got a breakout. That's not bearish news. So it's a sign of strength, and the question is, will the bulls try to come in at a better level? GDX, not the same pattern. This is not a tight sideways pattern. So while the market yesterday closed over the Bollinger Band, nice close, today couldn't add to it. It's fighting at that number, and it is overbought. Trend is up. It's hit an upside target. I'd be cautious. TLT, all I'm looking for is the first challenge of a Bollinger Band in an uptrend in an overbought condition to say, time out, you went there, end of my play in the market. That's how I'd be talking to my clients. In the FXE, still bearish as can be. You've got the euro still lying down here. Remember, FXE mimics the euro currency. That's what this ETF is about. bearish as can be. First rally's getting met with selling. Why not? This market's fallen so much, how many people are underwater? By the way, do you remember the trade that they all talked about to begin the year? The dollar's going to be down. Every December, I'd read articles because I like to bet against these guys most of the time. I don't know how you make a year prediction. No, it's beyond me. I have trouble with tomorrow. How are they doing a year? TAN. This is the solar ETF, powerhouse, embedded reading, but if we come back here, you got over the Bollinger Band yesterday. You're adding a little to it today. I'd be a little cautious here. The market's, I think, getting a little bit ahead of itself. Certainly not bearish. You'd have to lose the embedded reading for me to do that, but you've now got about a 97% chance, the way I count with my rule of thumb methods on the Bollinger Band, of it trying to get to the right-hand side of that. Want to remind you, free SPDR ETF afternoon video. I typically record that video around 3 to 3:30 and have it posted around 4 p.m. You need a user ID and password. It's available just by signing up for the free trial. We'll get it out to you and give it a try. I think you'll find it interesting. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.